This is your pre-market update. Meta plunged 11%, its worst drop in 3 years, after announcing expanded AI infrastructure spending for next year. The sell-off dragged the Nasdaq lower, cooling momentum across tech. Weekly RSI eased from overbought, and the fear-greed index fell to 37, showing weaker sentiment. The market score is 53.09, slightly better than yesterday, but valuations remain stretched. Monthly RSI stays high, TTM per extended, margin debt excessive. Despite the pullback, the market stays in a neutral zone, a pause, not a reversal. From a macro view, the recent rate cut pushed real yields below PCE. That means current rates aren't high enough to restrain inflation. As the Fed noted, we can only hope tariffs stay temporary, not structural. We'll revisit once new macro data arrives. Bitcoin also slipped as risk appetite weakened. Its fear-greed index dropped to 29, and the Bitcoin score fell to 45.71, near an early accumulation zone for gradual DCA entries. Equities remain neutral. Traders are keeping steady positions until momentum stabilizes. The final strategy shows that Meta's crash-cooled tech valuations, RSI and sentiment weakened. And while the market score improved to 53.09, hyper and leverage risk keep markets neutral. Bitcoin fear 29 and score 45.71 mark an early accumulation phase. It's a time for discipline, not reaction. Before the bell, watch these key updates. Chicago PMI expected 42.0 versus 40.6. Prior still below 50, indicating contraction. Samsung Electronics and NVIDIA expanding next-gen AI chip collaboration on HBM4 and AI accelerators. NVIDIA confirmed no extra Blackwell chip supply despite booming demand. Microsoft, Meta, and Oracle to build major data centers in Mississippi, boosting US AI infrastructure. AMD set to launch its next-gen AI GPU, increasing rivalry with NVIDIA. And US consumer sentiment fell to a 2-year 9-month low, signaling weaker spending and higher rate cut expectations. Don't forget to subscribe, like, and turn on notifications for more pre-market insights.